In this video, we're going to extend our break-even learning to looking at a business that sells multiple products. So this is a more typical use of break-even. Our foundation learning has been around understanding a break-even rules, if you want, around a single product business. So we start with a single product business just to get the foundation in place and the process. And now we're going to extend this and raise the bar a little bit to a multi-product business. So what I've given you on this slide is the income statement grid, which by now I'm hoping you recognize. And you'll notice that in the left-hand side, instead of having the selling price and cost price and margin expressed as rands, it's now expressed as a percentage. So in this case, the gross profit percentage is 20%. And typically that's an average margin across multiple products. That's how we might represent the profit margin in our business. I've also given some additional information around the tax rate. And in this case, I've used 25%. The way I use the tax rate is I say that the profit before tax represents 100% of our profits. And if you pay away 25% tax, you'll be left with 75% as a profit after tax. So if we put some numbers to this, and we assume that this business does R1 million worth of sales, this 80% cost of sales implies that 80% of the R1 million sales is paid away to the supplier for the raw materials that we use in our product. So this 80% here is 80% of the 100%. And mathematically, R1 million minus 800,000 will give us 200,000, which of course is 20% of the sales. For this example, let's just assume that our expenses are 100,000. So GP less expenses will get us a profit before tax of 100,000. And we're calling that 100% of our profits. So let's pay away 25% in taxes, and we will be left with 75,000 Rand in profit after tax. So I'm hoping that you can clearly see that the numbers are represented in the same proportions as the percentages. Now, let's assume that we're doing some forward planning, if you want, in our business. And we say, well, great, we had 75,000 Rand in profit after tax. What if we set ourselves a target to achieve 90,000 Rand profit after tax? I'm interested to work out what sales is required in order to achieve that profit. So I need to work my way back up the income statement in order to get to the number. So we've got to get from 90,000 up to a profit before tax. And if we look to see how these numbers worked out, well, here we said 100,000 minus 25% equals 75,000. Or what we would have done is we would have said 100,000 times 25% to get us the 25,000. Now, we cannot say 75,000 plus 25% to get up to 100,000 because mathematically that won't work. So we need a little trick in order to help us with this. So if you test this on your calculator, if you take 75,000 and you divide it by 75%, you'll see that you get back to the 100,000. So let's test that over here. If we take 90,000 and we divide it by 75%, what we'll get to is 120,000. Then the difference between these two is the tax amount, and we can test that. We can say 120,000 times 25%, you will get 30,000. Okay, so just remember, take the 90,000 divided by 100 minus the tax rate. That's the 75%. Let's keep going up the income statement. So the next one is the expenses. We're assuming those haven't changed. and we add 120 to 100,000 to get to the gross profit. Now, of course, if we've made more profit, it means we must have sold more goods because the margins have stayed the same. So the next step is rule number 5 of our break-evens, and that is to take the gross profit and divide it by the margin. So last time the margin was in rands when we were doing our previous examples. Now the margin is in percentage. So 220,000 divided by 20%, instead of giving you a volume, which is what we got last time, it actually gets you to the sales number. And now we can say what is 80% of 1.1 million, and we now have the cost of sales, and we've been able to complete our income statement using percentages rather than rands. Okay, so given this information, we're going to do an exercise that involves a multi-product business and uses percentages. So this business is called Tools & Co. Look out for it in the downloads folder. Read the questions carefully. There are lots of tricks in the wording. And the reason why I put those tricks in there is so that you can come to terms with the lingo and the language that gets used within the accounting world. And think carefully about the questions, because sometimes it's not obvious what they are asking for. So in the next video, I will go through the Tools & Co answers. We will see you then.